Hello, fellow option traders. This is Jeff, and welcome to Market Update for Sunday, February 14th, 2016. And happy Valentine's Day to everyone out there that celebrates Valentine's Day. And actually, happy Valentine's Day whether you celebrate it or not. It doesn't really matter. Just have a good day. Anyway, I thought that we'd quickly go over sort of a little bit about what the market did last week, and we'll take a look at an SPX chart to do that. Then we'll take a look at the Russell 2000, which is the only thing, well, not the only thing, but a primary trading vehicle for option spreads for me. And then we'll take a look at GLD, or the gold ETF, and what I did last week on it. And then finally we'll wrap it up and take a look at USO. I think this is a very good opportunity to get in on the ground floor on oil, and I'll explain why when we get to that point. Alright, so I did add USO to my watch list here. We'll be taking a look at that shortly. Here's the way the market closed on Friday, with the Dow and the SPX and the NASDAQ and the Russell all up like 1.75 to 2%. Big day. VIX dropped 10%. Gold is at 1238, which had a good week. And oil's at 2902, actually down to as much as 26. As you can see here on the USO chart, the low point was Thursday of last week. And this tracks oil pretty closely, and we'll take a closer look at that. Let's take a look at SPX, though, because that's what I promised that we would be starting out with. Now, I sort of prefer to make my recordings when the market's open, but I don't think I'm going to have opportunity at least until Thursday, and I want to get something in at the beginning of the week for everybody. So let's go here and just take a look at SPX. Now, this is last week. Let me slide this over here a little bit so I can see it better. Monday, Tuesday, Wednesday, Thursday, Friday. So it was a down week. As a lot of you know, or may know, I actually got out of my Russell position, the credit spread that I had, which was a bear call. Got out of that last week, so we made a little bit of change on that one. We'll take a look at that on the spreadsheet, which I am going to run up to my blog, so you'll find it under the downloads at theoptionguru.com/blog. Alright, so it's kind of a depressing week. We actually had a low here on the stochastic, and these are the indicators that we watch the most, and of course PPS. So we had PPS down on last Friday, and it continued down for the rest of the week and closed down from that close the previous Friday, even though it had a good day here this Friday. But that doesn't matter in the grand scheme of things, because now we have stochastic heading up and MACD heading up, and maybe we might get a PPS up, which is when I'm going to be getting ready to go shopping typically if I was trading SPX. But you'll find pretty much the same thing on the Russell. But before we go there, let's just take a quick jump over here and take a look at the weekly chart on SPX. And from a week perspective, I think I must have turned off my study here. No, there are no studies on there. Are you kidding me? Alright, I don't know what happened to this chart. I had a moving average on here, which is this one here, which is the 20-month moving average. We'll just take a look. This is a monthly chart, 20-year monthly chart. You can see that we are very strongly below this 20-month moving average. I had a 11 1,100 bear call on this at one time. So let's turn off price as a percentage here and go back to just regular prices. And this is where it was right here at 1,100. And that one I made my profit target on it. So we're good on that. If we go back here to the Russell, I'm done with the SPX. I'd rather just talk about the Russell, if you don't mind. Let's take a look at the Russell 2000 here. Okay, pretty much same thing. Stochastic moving up nicely. It's at the 50% level. We had a nice up day last Friday. We move up a little bit more and then hook down. We might have a good day Monday or Tuesday, and then I would definitely be looking on getting in on a bear call if we have a couple of up days this week. I know that everybody's thinking, well, wait a minute, wouldn't you rather do a bull put if it's moving up? No, because the overall trend is definitely down, and all it would be is probably just a little blip, and then we'll probably be heading back down again. That's what I'm figuring. So we are definitely in correction territory here. Okay, what would I do? Well, the way that I figure these out is, let's see what we got going here. I do have a possible march in here. What I would do is if I'm going to do a bear call, I would say, all right, what's a standard deviation, and what is, well, basically, what is a standard deviation? And it's at 1070 roughly. So that's what I would pick. My short is in at 1070, and then 20 points out from that for my long position, and that would give me $1.17 credit. But if the price moves up beginning of the week, continues up, then of course everything is going to slide this way. So I'll have different strike values on this. But as you can see, 117 bucks is just fine with me, because I would be looking to get out at roughly 50% profit. So I probably put a good till cancel limit order for to buy it back at 50 cents or 45 cents or 40 cents or something like that, like I did last week on my last previous bear call on this. And let's take a look at that just right quick. Here it is right here, this particular row, and close that out on the 8th. Bought it back for 40 cents. I collected $1.16 on it, bought it back for 40 cents. There's 3 positions, made $213. And here's a little, just bought a call on GLD, and we'll talk about that in a moment. Let me just finish up with RUT here. Okay, so that's pretty much what I would do. And if I turn this on, you can see the break even is right about at 1 standard deviation, and which is now a 10% move. So the dotted line here is 10% up, which would be a significant move up. I don't see any way that it's going to do that. But a 10% down, yeah, I could see it doing that. But I can't get a strike low enough to make me any money down here unless it starts to move down after I'm in this position and then gives me a hook up. I might do something then, but it's just moving too fast to the downside, and I just don't feel comfortable doing bull puts on this, on any index in the market right now. All right, now I'm going to talk about gold. So GC is the gold futures, and we can take a look. Take a look at a chart on the gold futures. So it was a big day on Thursday, and that's when I jumped in on this trade. And here it is, back again to the spreadsheet right here. I did a January, so I have 8 months on this, and it was at the money at the time, and I paid $9.03 for it. So here's what it looks like on a risk graph. And I just need to go to one account here, into the JPIRA account. So here it is. A 119 call for 903. Things are a little bit screwy right now because, well, actually we're just about at break even, which is a good thing. And we're looking for, I don't know what we're looking for. If I look at the chart, even if I go to a 20-year chart, and we get it to move up to, now there's a lot of drawings on here. I'm going to get rid of some of these, or I'm going to get rid of all of them. Come on, I just want to get rid of all drawings. Remove all drawings. There we go. Yes. All right, so if we can get this, well, the high was back here in March of 2014. So if we can get back to that level, which would be 132, and we went to the Analyze tab, and we moved up to 132, and it moved quickly, we would meet this purple line. But if it moves really slow, then we'll meet the blue line, which, you know, will still be okay as far as I'm concerned. But I'm looking for a quicker move on that. I'm just going to take this off there. A quicker move on gold. So, you know, if I can get, you know, $200-300 off of this, I'm going to be very happy. I don't have an order in yet. I don't have a target set yet. I'll do that, you know, probably later this week. See how things move. So that's what I did. I know it kind of looks like I chased it, doesn't it? Especially if I go back to a daily chart. I chased it up here, and I pulled back a little bit on Friday, but I have a lot of confidence that it's going to continue to move up as the economic climate deteriorates. All right, the next thing that I wanted to look at, and I was thinking about this, which really prompted me to make this video, was oil. And the ETF for oil is USO, for US oil. And here we have it. Can it get any lower than this? Probably not. But what I've been hearing is that a lot of the fracking companies are going out of business and they're shutting down. And a lot of the big oil companies are not pumping anything out of the ground now because it costs them more to refine it than what they're getting for it. So what is currently an oil glut may, and I say may, end up being an oil shortage. And just doing a long call on this right now at this price is not going to break the bank. So here's what I have selected. It would be, again, a January of next year 8 strike for $1.87. And here's a detail on it. Now, let's take a look at if oil moves back. Well, first of all, the question is, does USO track oil? Well, yeah. And I'll show you. Let's go USO here. Oops. Okay, here's USO, and let's compare it to, we do that in studies, yeah. Come down here to, you can't see it, but it's a compare with at the bottom of this drop down list here. You just come over here to the custom symbol and type in /CL, and that gives us the oil futures for light sweet crude, and you can see that USO follows it almost exactly. So we would be looking, right, get rid of that, just right click that purple line when it highlights and just say remove it. Now we're back to normal. So here we are USO does track light sweet crude futures quite well. Thank you very much. So we would pick that one as our trade vehicle. Hopefully we can, maybe get back up to $20, or maybe ideally get back up to $39. But let's say we just get back to $20 on this particular trade. If I get in for $1.87 and the price gets back to $20, we're looking at $1,000. That looks like a pretty good trade to me, and I might do more than one of these since it's only $1.87. So I think that that's a pretty good trade for the future. I don't really have anything more to say, so we'll see how things kind of run this week. It's going to be interesting when the futures start trading this evening at, like, I think 6 o'clock Eastern or something like that. And that will be a good thing to take a look at. So from sunny Florida, at least for the month of February, I'd like to thank you for watching, and have a great day and happy trading.